All right. I can't hear you, bro. You muted. I just need to know if you can hear me. Can you see my screen? All these technical difficulties. All right, y'all. Well, whether you can hear me or not, I'm gonna go ahead and kind of go over some trades I put out, see what's going on for setting up for today and tomorrow. So hopefully you'll be able to see me as I am. I will be adding this on a YouTube page and Investopia Worldwide. So we're actually going live right now. Setting up for today. So we're live right now. And so, yeah, let me know if you can hear me. If you can hear me, my computer is really giving me a hard time, but that's okay. It's all okay. That's not what I wanted to do. That's what I want to do. All right, so silver did hit our TP. And there's a couple of trades that I put out. I wanted to go over them real quick just for technical analysis reasons. I can't hear you, Tavares, but we put
I hear
out some.
you. I see your screen.
Okay, cool. So we put out a couple trades. Were you able to get in those trades?
I was not. I was driving to work.
Oh, okay. They're gonna be coming out probably some like that time, during that time. I got some things happening I'm really excited about, and sharing it with my team, a group, Envision You. A lot of opportunity for you guys to get the bag and to learn the skill as well. We put out this trade here, which is our silver trade. And you can see basically we were in a nice uptrend here and we captured some liquidity, broke out our resistance area, and we could have caught it a lot further down if we would have caught it like on Monday. But it's really good though for those who just want to scalp and get in the market. For those who trade in a little bit higher lot size, that would be beautiful. So once price broke above our resistance level right here, we got a nice retest. That could have been our major entry, but we did have another flag right here after, if you're looking left, you can see that price came down again and rejected and came up and retested right in this area right here. So this would be this is the reasons why we call that trade a silver trade. And they're all pretty much going to be market execution, and let's say so. So if you see those trades that come out in the chat, when I drop them, that just means get in. Okay? If you don't see an entry, that means just get in. If you just see take profit and a stop loss, that's a market execution trade. All right? You got me? So you're going to be seeing these coming out almost every day, every morning, sometime around maybe 6, a little bit after 6 or 7. It could be right before New York session open up or right after. So anywhere within that 2 hour time frame, 2, 3 hour time frame, it's just giving more opportunity. And I wanted to come on here to let people know simple ways to get in the market is to look for your highs and your lows and put in your highs and lows. And you put it in your SRTs and, catching the market. You can pretty much catch the market 24 hours a day Uh, but you're looking for these particular uh, pullbacks and continuations in the market. So after market catches liquidity, comes back and grabs liquidity, it's looking to take off. So basic off whatever trend we're in, you can see that that was a nice call once call, broke that resistance, came back and tested it. That was your entry level. These are going to be called on the 1 hour entry, 15-minute, 30-minute, um, with our strategy. Even if you were just using the red, green, the whole, which it turns green for buys and red for sell. Even if we was to put a vertical line on here, you can see that that was a beautiful retest. We got MACD green, we got the crossing on the RSI. Things that I went over with you last time we were on the call, but that was a beautiful retest call right there. So that would have been a beautiful entry. That happened at 2 o'clock this morning, but we called it right here around 6 o'clock with another retest right here. And you can see that this went on to hit TP, and it was a nice 30 pip move for silver. All right. Let's look at gold. Gold is kind of the same way. Gold and silver pretty much runs the same way. So I can put my SRTs in there again, finding my high and my low. I got my resistance in, I put my support in, my low. All right. And then I can draw my uptrend. I can take my trend line and I can drop my up. As long as you have at least 2 to 3 touches, your trend line is valid. I do like this area because I believe it may come back down to that support line, kind of right here. So I do like that area. All right. And I want to do this without the super trend on, just because when you're going in the academy, you're learning that the market moves in waves. It makes its highs, its lows, and then its highs, its lows, highs, and its lows, and its highs. And if you if you're trading with the trend, then you should be looking for buys, 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 buys. You're looking for buys. Next pullback came right here, tested this area right here. Boom, that's a buy right there all day long. And at 6 o'clock, when I drop these trades, you can see I can put my retest candle right there, retest trend right there. We got that doji, and it came back and retested and took off. Okay, so we call this trade. I dropped it. What? I dropped those trades in around 6:30. So anywhere right here, you can see, and the TP was 28.26, and the resistance line where that liquidity bar is 28.36, and we smacked that TP. So that was nice 22 pip move, and that was a nice scalp. So that's why I call them scalp. So even with gold, we go to our value pip calculator here. Oh man, this is really lots of slowness going on right here. So if we looked at our value pip calculator here, all right, and Come on. And we clicked on gold, and let's say it moved 20 pips. 20 pips. Guys, that was a quick 200 bucks. So you went in the market with $10 and you came out with 20 bucks. So this is kind of like how scalping helps people who may have a larger balance in their account, you know. With this computer going slow right now, I wouldn't bring up the risk management chart for gold based off for any currency or any market like indices or crypto and forex, but it kind of shows you where your limits are as far as what your lot size should be based off your account. So if someone had $500 to $1,000 in their account, that would be a nice entry to go in. Would go, I would say more like 1,000 to 2,000 to go in for a lot size and make 200 bucks. You see how quick it hit that TP. Now, if we went in for, $5, went in for $5, that would have been 100 bucks. If we went in for 50 cents, it would have been $10. And that still earned profits. That's really, really good. So, I'm not saying go in with no $10 lot size, but I know you kind of showed me a little bit what you had in your account. But that would have been a good move right there to go in the market with 50 cents. And just for 20 pips, you came out with $10. I mean, think about the ROI on that. All right. So those two hit, silver hit, gold hit, silver steady going. All right. Gold is steady going. These were good trades that we put out. And then we have a Bitcoin trade right now that's the TP is here and it's trying to get above this 99, this area right here to hit that TP. I'd like to see it get above this line here. Okay, so let's see if I put the fib on it. So it came down to the 50 and we're bouncing back up. So it made that higher high, it made a higher low, and now we're believing to get back above here after that big sell-off because of the fundamentals and the tariff information. And again, people sell in emotions. They sell in emotions. They get afraid and they sold off. Companies sold off. And it was just timing. When we put some trades out, it's just timing. We don't know what they're going to say, when they're going to say it. This is why we do keep in contact with news. But when I put out about spot trading, say if you were on Coinbase, or crypto.com and you got a position kind of, let's just say over here, that when the market was over here, we thought we were going to get a nice bounce and stay up. So your trade, that position grew that day over 5.7%. Okay, now that grew 5.7%. Well, you still holding that trade, okay? Especially if it's Bitcoin. If it's Bitcoin, Ethereum, Litecoin, if you're not trading on leverage on the exchange, you're spot trading. So your goal is to hold these trades. This is just to hold it. Can you imagine getting in at 16K and it went back down to 9K? How would you feel? But at 9K, you would have got another position. And then from 9K, it went to 24K. So now you got two positions in profit. And the same could have happened for somebody right here who got in they got in here and it grew 5%. But then somebody said something in the market fundamentals and it dropped 13%. This is how the markets are. This is how the stock market's go. But instead of running in fear, you got you a position here. You look left. That is a support area. Price came down and hit that support area. Boom. So you can see from here, it went up here. So I grabbed me another position here. I'm holding a position here. And from there, dollar cost averaging trading, your portfolio grew two positions well over that's 15.6, but you got an extra 5.6 here. So your portfolio just on those two moves grew over 25%. And this is what dollar cost averaging would do for you. So if I put out a spot trade and I say get in at a certain area, the market, nothing is perfect. There's no perfect market. There's no perfect news. There's no perfect fundamentals. We know that the psychology of it is that if they put something out to make you feel bad, you're going to sell. There's only one reason to sell. Is when price hits the goal that you wanted to sell at. That's when you sell. You sell when you set a goal. I'm going to sell when Bitcoin gets to 120K. So that's what I'm going to sell some Bitcoin. I'm not going to sell it all. But I'm going, my altcoins I'm going to look at because they have take profit areas as well, right? So we have this set up. I mean, look, I'm still holding a position at 69K right here. Right here. Now, I probably had positions over here at 69K and the market dropped all the way to 54. But what you do is you buy at 54. And it took off and came back at 54. You could have bought again, or you can hold, and then boom, it took off. Boom, it took off. Boom. And now look what it is. Can you imagine buying at 69K? And now, are you like really emotionally in connection with the market falling from here to here? No, you don't care because you're way out. You're way out. And that's what's going to happen. So 20K is where we're going to take profit right here. So this move was to psychologically get retail traders out of the market so they can't buy a certain amount of Bitcoin unless people sell a certain amount of Bitcoin. Nobody can buy Bitcoin unless people are selling Bitcoin. Okay, there's only a fixed amount. So if you hold on to your Bitcoin and never sell, you'll be rich one day. But if you panic because you see something like that, and then down here you bought up here, but now down here you selling, so you make no profit. And look, it went down, and look, it went all the way back up because those who sell and got out, the institutions bought right here. So I put a Litecoin trade out, and all right. And yeah, I thought that that was going to hold at 21, but all it did was give me another opportunity, because on the spot trade, if you bought this spot, like I put that out for spot, not leverage, that our entry was at 126. And when they came out with the information about the tariffs, everything started falling. I said, well, get it at 120, 122. And it came pushed all the way down to 80. When was the last time it was at 80? December 20th, on Friday. It broke 87 and came to 80. You got, so basically November 21st, on a Thursday, it was at 80. All right. So can you imagine holding that position right now at 22 and getting a position right here at 80? Oh, that's like a steal. That's like a steal. So this position right now is in profit. So it's dollar cost averaging. What you would be negative here without having this position now is a lot less, because this position is way in profit. Does that make sense? So when we dollar cost average, we get a position here, price go up, we buy the dip, we get a position here, price come down, we get a position here, price go up, we let it go, we let it continue to go up. We think it's going to take off, and it comes all the way back down here. We get a position here, and right now, this position, this position, this position, this position, this position is all in profit. So you basically quadruple your portfolio because you dollar cost average. So playing the dip is important. Say you bought here, price came up, it dipped to here, you bought there. It came up, it dipped to here, you bought there. Came up, you took some profits. You took some profits off the table. Price came down, you bought here, went back up. You might have took a little bit more profits. It came down here, you bought the dip here. It went up here, you took a little profits. It came back down to here, you bought again. Dollar cost averaging. And that's what you want to do when it comes to spot trading Bitcoin. I would do that only with some of the major altcoins. I wouldn't do that with a lot of altcoins, but the ones that do have major products, the ones that we are focusing on. But I definitely would do that with Bitcoin. I definitely would do that with Ethereum, and I would do that with Litecoin. I would do that with Ethereum Classic. I would do that with Solana. Right? I would do that with Bitcoin Cash. I would do that with Shiba, Doge. I would do that with some of our major altcoins, 88. I would do that, XRP. I would do that with those particulars because they have major projects they're working on. They're using it now. The utilities of them now are banking institutions are using them for payment options and things like that. So they're going to be around and they're going to grow. And if they make them ETFs, it's just going to be more interesting. So I wanted to come on here to give people an idea of how, to spot trade and how to, look at the market in a in a investor way, and don't let so much of the psychology of how they know you're going to react discipline you enough that every time they do something, you go in panic mode. That's not an investor. Panic when you're investing, it's in anything, it's long, you have short-term, midterm, long-term goals. You don't you've got to ride it out. Like my if you want to get some, I want to introduce you to a broker that don't have any swap fees for US oil. So, or you can get US oil on your Robinhood, or you can get it in Fidelity. Okay. But this was a move that I call got that tip. And I think I got it on this one. So we got this tip, and we got it at the right time because price was around $68, $68, $69. And we called this trade, and it's a long-term weekly trade. And we got that trade way down here, and price went all the way up to 78, no, $80. $80. So can you imagine, you know, getting in a trade on your MetaTrader 5 or 4, getting in oil and taking it at 69, and boom. But this trade is not even over. This is like a trade for the year, because sooner or later we're going to get this trade is going to break out, and it's going back in because of the news of the tariff war with Mexico and China, and they're in communication with Saudi Arabia and the oil, and there's a big meeting coming up on Friday. So I truly believe that this trade was going to still be good because we made a lot of money in this trade right here. So as long as this trade does not break this low and retest and go below 68, we're going to keep getting this trade. So I want you to watch out for this trade, okay? I would buy some if it was like on Robinhood or Fidelity. I would buy some above 70, above 68. I would buy it where it is. If it came down in the 66 or 69, I would dollar cost average it, and I would buy it again. But on your MetaTrader 5, okay, I'm going to have a new broker in my subscription here on YouTube. And if you want to get this move here and got some great benefits coming, then you won't have to worry about swap fees or nothing like that. You just be holding the trade. So it's best to get it at its lowest point, because now it's coming back down into this area here where it probably, when you look left, you see how strong this area is. That price could never break. Once it broke above it, it's a major area. And I'm just telling you, this is where Warren Buffett bought. Warren Buffett bought right here. He took a lot of money out of Bank of America and other different places, and he put a lot of money in this area I just give you. So I did it for two reasons. I did it because the technical analysis seemed right, but I also did it because I got the tip that a billionaire has put a ton of money in oil right here. So that they got the more insight than I do then. And success leaves clues. So just that one big move, can you imagine how much money he made right there? Even if they chose to take some profits out right here before Trump went in office. And then when Trump went in office and they start talking about the tariffs, okay, then everybody starts selling off and then price start going back down. And so now I truly believe it's going to happen like this. Retest and go back and then really take off. And I want to be in down here. Okay. So I gave you that tip. You were the one that got on. And if anybody got it on YouTube, thanks for jumping on. Appreciate you. Be on the lookout for some more tips in crypto, tip ways to look at the market. We'll be going over the Wall Street psychology cheat sheet next. And I'm sure you're going to like that. So, all right. All right, bro. Hopefully you got some nuggets and keep an eye on the chat.
Thank you, sir.
Yes, sir.